In this video, we'll be talking about support and resistance. Support, which is a price level at which buying pressure is strong enough to prevent the price from falling further. You can see in this diagram, we have support drawn out in the blue rectangle over here. And when there's multiple touches on the support, it just means that you have a strong support level. And for resistance, that is a price level at which selling pressure is strong enough to prevent the price from rising any further, represented by the red rectangle over here. All right, so we have our support and we have our resistance. And when you have support and resistance, that creates a range. So support and resistance level help traders identify areas where prices are likely to reverse, offering opportunities for optimum trades. And also with clear support and resistance, it helps us with risk management because now we know where to put our stop loss, which can help us limit potential losses. With proper support and resistance drawn out, we can easily spot the breakouts or the pullbacks, and we can know when to enter and when to exit the trend. Now, there are different types of support and resistance levels depending on how you draw them out, and everyone draw them a little differently, and there's no exact way to do it. But we have the horizontal support and resistance, which is price levels that have acted as support and resistance multiple times in the past, like what we've seen earlier. We also have trend line support resistance, which is a diagonal line drawn along the trend line indicating areas of support and resistance. We have dynamic support and resistance, and most oftenly used is moving averages or some kind of trend indicator that adjusts based on price movements. And some people use the Fibonacci retracement tool to draw the fib levels and then identify the key levels based on the fib ratios. So if we head over to my browser, just give you a quick demonstration of this. In TradingView, as you can see, we can draw the horizontal lines, and I normally just use this horizontal tool over here and draw my support resistance. And this is basically the horizontal support resistance, right? If you draw something like this. And then we also have the trend line. For example, I would use this tool over here called the trend line tool. If we draw a diagonal line, that can act as support resistance as well, because you can see that over here, the price hits this trend line and goes back down and creates this resistance level over here. And then we can see over here as well, we have a trend line support resistance drawn out here. So that is the diagonal trend line support resistance that you can draw out. It can be on top, it can be on the bottom, depending on price action. And for dynamic support resistance, for example, if we just add this indicator here, which I normally don't use this indicator because we have our own, but I added here just to give you an example. You can see that this moving average here is acting as a resistance, right? And then right here we have resistance turn support. It's dynamic because this moving average is moving along with the price action. And then this moving average is acting as a support resistance to give you an idea of potential reversal or pullback. All right, so that would be dynamic support resistance by using the moving averages. And then we also have the fib levels right here, fib retracement, which is represented by this icon right here. We can draw the fib retracement over here from swing high to swing low. And then you can see that close to the 30% mark, we have a resistance. And once it hit this resistance, it's going down. We'll talk more about the fibs because it's really important as well. So once you draw the swing high to swing low over here, you can see the price action move down and hit the 61.8 level, bounces off, and then goes down to the 30% to 20%, right? And then this can act as your support resistance as well, and a lot of people use that as well. And we'll talk more about the fib in another video. but those are the different types of support resistance that you'll commonly see in Forex. All right, now let's talk about the strategies that you can use along with support resistance. And of course, we'll have a whole different video on strategies, but here on screen, you'll see a breakout strategy, which is entering a trade when the price breaks above resistance or below support with the stop loss order placed on the opposite side of the breakout. And then here is an image where you can see that the price is breaking out from resistance over here, and that will be a breakout entry. Now for a pullback, sometimes you want confirmation for a safer entry. We have this pullback strategy where you enter a trade after a pullback on the support or resistance, anticipating a continual of that trend. And then you can see this image I have put together for you. We have a breakout pullback to the support turn resistance, and then the price going back up as a continual trend. And then for a range strategy, it's basically a consolidation that we have here in a range, and we can trade within the range by buying near the support and or sell near the resistance. And then you can take a look at this image over here. So those are the basic entry strategies based on support and resistance. Definitely go back and watch this video because it builds the foundation of what we'll be talking about going forward. With that, I'll see you on the next one.